Before we get started, I just want to give you a little information about myself. My name is Demi, and I'm an entrepreneur, also a business owner, and a coach and mentor for youngpreneurs, and also a real estate professional. And today we going to be talking about some home buying tips for first-time home buyers. Here I have Pamela Simmons. She is my sister, my partner. We've been working together in the mortgage professional for like over 10 years together. So I'm going to be asking her some common questions that we both get a lot from first-time home buyers. What is the process, and some information that you should be aware of when you go and purchase your home for the first time. Also, let me just give you a little information about Pamela. She has a background in financial services. Um, like I said, she also is a mortgage professional, and she also been a tax preparer for over 20 years um, as well. So we are going to ask her some questions. Feel free. I have some questions on my own. Like I said, some common questions that we normally get. Thank you, Matt Champagne, for joining us. That we get from people who's looking to purchase a home. And I'm going to turn it over to Pamela, let her give us an introduction of herself and who she is, and then we'll get this interview going.
Again, my name is Pamela Simmons, as Demi stated. I'm a native New Yorker. Actually have a BA in journalism, and she just touched on little things of my background, which is in real estate and finance. As she stated, I've been a tax preparer for over 20 years. I'm just here to kind of, give a little tips on, for those who are first-time home buyers.
Yes. Thank you for that introduction. So I have my first question, and Pamela, can you tell us about the different loan programs out there that's available for first-time home buyers?
Okay, there are different types of loan programs. We have non-conforming loans and we have conforming loans. Conforming loans are pretty much our standard federal government loans, and then we have the non-conforming loans, which are pretty much the non-traditional loans, which qualifies pretty much anyone who, is trying to purchase a home. There's different types of loan programs under there. You can, qualify as low as 65% of the lender lending, something to as high as 95% of the lender lending on your non-conforming loans, and then your conforming loans, which are your FHA loans, your Fannie Mae, Freddie Mac loans, which, you have the down payment assistance programs that go along with it that can sometimes get most borrowers into a home at 100%.
Okay, and that goes into my next question, because a lot of questions that we normally get from borrowers, they want to know, can I actually purchase a home with no money down? And can you explain that to us a little more in details? What does the no money down program, and who actually qualifies for that?
With the no money program down, a lot of times it is for our first time home buyers who are doing our conforming loans, which our conforming loans are pretty much our Fannie Mae, Freddie Mac, FHA, VA loans. These borrowers qualify under a certain criteria, which allows the borrower to actually put down a certain amount of money, and then they can have gifted funds that are gifted to them that can actually use as a down payment to purchase their homes.
Yes. And sometimes the gifted funds, just to piggyback off what Pamela is saying, it could be from a relative, or it actually can be from a charity that will actually give normally around 3 to 5%, somewhere around that. They could give funds to you so you could come in and purchase as a no money down. Also, I just wanted to, I lost my thought there, and I'll come back. It was something else I just wanted to highlight, but I'll come back to it. I know it come to me. Okay, just got it. Because I know a lot of people want to go on and they say, I want to buy a home. And there's some criteria out there. There is a standard criteria out there for you to purchase a home. And some of the criteria out there is you have to be on your job for 2 years or in the same line of profession. And then this is the biggest one, and that we get a lot. It's your debt to ratio. What that means, and explain to them what the debt ratio means.
Well, your debt ratio pretty much qualifies the borrower to get into the home. Pretty much you sit down with your loan officer, your loan originator, because there's different names, your loan originator, loan officer. It's still the same. You actually sit down, they do a pre-qualification with you. That pre-qualification is they're going to go over, your loan officer is going to go over these qualifications and pre-approve you based upon the income that you state to us that, okay, this is what you make, or if you have a co-borrower, this is what they make. And we pretty much have is what we call the DTI, which is your debt to ratio income. That's what qualifies you. A lot of times borrowers, just say we're going to use a scenario like someone wants to buy a $100,000 home and they pretty much is only making maybe, $40,000 a year. Pretty much, if that they made, you want a house at $100,000, $40,000 would normally qualify you for the home. But a lot of times, once we put you in the system, your debt to income may supersede what the requirements are for that 41%,
which would be the 41%.
Right.
So, in all reality, to sum it up for you, with your proposed mortgage and your debt, like a car loan, student loans, credit cards, whatever you may have, it all has to fall under that 41% of your income. If you exceed that 41%, then your debt to income is too high and you don't qualify for a conventional loan, which is normally, like she said, conforming Freddie Mac, Fannie Mae, or FHA. That's when you find some people, some borrowers that's actually over the 41%. That's when they fall into the non-conforming loans, to give you an idea. And if you have questions, feel free to post your questions in the comments area, and we'd be happy to answer your questions. Or if you need clarification on some things that we're talking about. So I'm going to go on to the next question, because we're talking about what is some of the criteria that you need to qualify for a home. And again, we talked about the debt to income ratio. We talked about how you need to be on your job or in the same line of profession for 2 years. Also, your credit score plays a big part. And there's 3 companies that we pull from, and they are...
We pull from Equifax, Experian, and TransUnion. Pretty much as a borrower, once you come in, you sit down with your loan officer, your loan originator, and they pull your credit. There's going to be 3 scores that come back from those 3 credit bureaus that are reported pretty much every 30 days, every 45 days. These are reported to the credit bureau. And based upon what your credit history is what the lender pretty much lend off. So they take the 3 scores and they use the middle of the 3. So you can have a 600 credit score with Experian, you can have a 620 with TransUnion, and you can have a 630 with Equifax. Pretty much they're going to take the middle, which would be your 620 credit score, as opposed to your high being a 640, because they use the middle credit score to qualify you for the loan.
Okay. And that is agreed. Now, another question we get, based on rate and how it works here in America. The better your credit, the better the rate you get. Absolutely. So, Pamela, can you tell us some of the ways that a borrower can improve their credit score to get a better rate?
On your credit report, and make an arrangement and agreement with them, and then sending it to the credit bureau to update it with the credit bureaus, all 3 of them, stating that this agreement has been paid in full. So that kind of remove the negativity of the charge off. And also, a lot of times, a lot of borrowers don't have a lot of credit, So what I advise people is that to help build credit, you can go to your local bank, whomever you bank with. It could be, the credit union or a regular bank, and you can inquire about secure credit card. Secure credit cards is always good to have because what happens is your bank is lending you money based upon the money that you actually put into the account. So if you go ahead and you just say you open a credit card in the amount of $400, the secure credit card bank is going to require you to put in $200 into the account, but they actually lend you an extra $200 to shop. But what you need to do is when you start building on that credit that you have, I would suggest that always stay under half
50%.
of 50. Always stay under 50, which is half of what it is of what you have as far as a credit line. Because what happens is if just say you have that $400 credit limit, as long as you're at $200 or less, but you're actually making payments, steady payments on it, it's going to help
boost your credit score.
A lot higher, a lot faster. Well, which now will take you into the qualification, and sometimes that can take up to 90 days to actually show up on your credit score.
A few points
higher. But that would be my suggestion for those who may have struggling credit issues.
And I also got another quick tip that may work. No, it doesn't may work. It does work. And hey, I'm going to give it to you. If you need to boost your credit a few points, if you know someone, your husband, your mama, your dad, who got excellent credit, ask them to add you on their credit card as an authorized user. Not as being part of the loan, but just an authorized user. And their credit will report on yours, which will boost your credit score at some point. So that's a little quick tip if you didn't know that.
As long as their credit isn't, they're not over the limit that they should be, or at max out the limit they should be on their credit card.
Yeah, and it'll report on yours, so you'll get some few points to boost your score. And you don't even have to have the credit card. Okay, just say, hey, just add me to your account. You got great credit. I'm looking to improve my credit score because I'm trying to buy a home. If you know that you are buying a home or you want to purchase a home, do not go out there and buy a brand new car. That will kill your debt to ratio out the window. Buy your new car after you get your home. Okay? So, moving forward, another question that we get is, okay, I want to buy a home. And how long does the process take? This question.
Okay. Normally they tell you that when you actually go out and you get your pre-qualification letter from your loan officer, your loan originator, you actually now go out here and you seek your real estate agent. Your real estate agent now takes you out to see what you can afford based upon the buying power that you got pre-qualified for. Once you have done that and you pretty much have gotten a contract that's signed, that's accepted, once that contract is accepted by your real estate agent, by both parties, the seller and the buyer, once you actually have a signed contract, depending on the loan that you have, depends on how fast you can close on your house. A lot of times your non-conforming loans are going to close a lot faster than your conforming loans because the non-conforming loans the criteria isn't as strenuous as a conforming loan. And I'm going to say conforming loans because those are your government loans, which you have strict guidelines that you must follow. Within those strict guidelines, these contracts that are set up for 30 days. But a 9 out of 10, if you have a non-conforming loan, you'll close within your 30 days. But if you have a conforming loan, which is your traditional loans, which is your Fannie Mae, Freddie Mac, FHA, VA loans, those loans, 9 out of 10, because of the strict guidelines, they don't close in 30 days. Not only do they close anywhere between 45 to 60 days.
Thank you for that information. And there's two things. You could go to a bank directly and apply for a loan, or you can deal with a mortgage broker. Now, the difference between a mortgage broker and a direct lender is that a mortgage broker deal with several lenders. They may be able to give you shop a better interest rate or something like that. it really depends. And then you have the direct lender, and sometimes we get a better interest rate with them also because you're dealing with the bank directly. As it's over and you would like to know more, you can reach her at.
Oh, you can reach me. I'm on Twitter at Pamela R. Simmons. At Twitter. As also, my email address is PAM R as in Robert Simmons SIMMONS at gmail.com.